Hey everyone, David Trungale here with TraderTours.com. Thank you for tuning in, and this is going to be a video reflection which addresses the question, can the market be beat? Because I've heard people say that you can't beat the market. It can't be done. There's no way. It's impossible. So first and foremost, I wanted to address what that even means. What does it mean to beat the market? And secondly, I wanted to prove that it can be done, but that doesn't mean that it's easy to do, and that doesn't mean that it happens all the time, because for every person that has, quote, beated the market, a lot of people have lost money or simply generated a return that has not kept up with the pace of the Dow Jones or the S&P. So, by definition, the Dow Jones Industrial Average is what we would call the market. Right? It's a general idea of how the market is doing because it is an index comprised of 30 large corporations here in America. So when you hear people say, the market's doing well, or man, the market crashed, they're usually talking about this index. And here's a graph of the Dow Jones over the course of many decades, but let's just go from 2017 back to 1997, because that's 20 years, and I think that that's a long time, and that will give us an idea of how the market has performed in the long term. That's, again, a long time to sit around. So back in 1997, the Dow Jones was around 7,000, maybe 8,000 per share. Today it's a little over 22,000, so let's just round our figures here and say that the Dow has tripled approximately, right? So you would have tripled your money if you bought in 97 and simply held until today and sold out. So that's a 200% return. Let's pull up Apple, which is actually one of the 30 companies listed on the Dow Jones. Well, if we look at the price of Apple, it's selling for $153 and some change today. And back in 1997, it was 79 cents. Let's just call it $1 to keep the math simple. So Apple has gone from $1 to $153. So that's 153 times your money versus tripling your money. So Apple has absolutely obliterated the returns of the general market. So to say it can't be done, obviously, is incorrect. I mean, I proved it right here. But with that being said, I do think people need to appreciate that not many people bought Apple in 97, right? Not many people had the discipline to hold on to it after all these years, and let's say they hypothetically sold out today. And for every Apple stock, you can find dozens and dozens of other stocks that have either gone down in price, and there's some that have actually gone bankrupt, where as a shareholder you would lose everything, right? You would lose your entire position, at least, that you put into that trade. So I'm not trying to necessarily say that the Dow is better or worse than individual stock selection. I would say that it's more conservative, and if you don't want to delve into the world of trading and investing, that the S&P 500 or the Dow Jones is probably the right way to go for you. I just wanted to explain, though, that there is a risk and reward balance with every investment that you make. So if you're going to select stocks on an individual level, it is possible to generate much higher returns and potentially become wealthy in a shorter time period, but there's also more risk because Apple could fail as an individual stock. Even though it's a large company, and it probably won't, at least not anytime soon, it's still more likely to fail than a basket of 29 other stocks, right? So that's the whole idea behind diversification, is that one or two companies might fail, but it would be unlikely for all of them to fail. There are some different strategies that I personally implement if I think the market is going to crash, but that's something I cover in other videos as well as the website TraderTours.com. So hopefully you found this video to be interesting. Again, in conclusion, obviously it is possible to beat the market, but a lot of people simply don't do it because they either don't have the information, or they're randomly picking stocks, or those that do, perhaps there's a little bit of luck involved, or they're simply willing to accept more risk. So remember, there is no free lunch. Thank you so much for watching.